Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO and founder of Aza Finance, Elizabeth Rossiello. Thanks so much for joining me.
Thanks for having me.
Okay, so before we get cracking, we're going to learn a little bit more about Aza Finance. Okay, so Elizabeth, tell us more about Aza Finance.
Aza Finance is the largest non-bank foreign exchange broker and technology platform for the African continent. We were established almost 9 years ago, first incorporated as a company called bpifrance, where we were trading foreign exchange using Bitcoin as a middle layer or a middle currency in Kenya. And since then, we've grown across the entire continent, up to Europe, where we're licensed in Spain, over to the UK, where we're licensed in the UK, and now we trade almost every African currency against almost every global currency. And sometimes we use cryptocurrency as a middle layer, and sometimes we just use fiat. And right now we're a growth stage company of about 250 people, and we trade a couple of $1 billion a year.
Okay, and give me some more numbers around Aza Finance if you can, things like revenues, fundraising, growth.
Yeah, we don't
okay, but one thing that is of key importance these days, given what's going on both public and private markets, is profitability. So I guess being profitable, you're in a much better position than many fintechs out there.
Right. Well, we're a Pan-African business, so that means we enter a new market. We strive for profitability, and then we enter another market. So in the markets where we've been for about 18 months, we've achieved profitability, and then we spend on expanding into new markets. But our revenue model, our entire business model is about efficiency. So it's a little bit different than another type of venture model where you spend to grow or you have a loss-making revenue model. For us, it was very important not only to build the infrastructure, but to have a profitable revenue model.
And I think you've already launched Africa's first digital currency exchange, and earlier this year you teamed up with FTX to expand the adoption of Web3 and digital currencies across the continent. Given what is happening and what's been happening in the world of digital assets this year, was that good or bad timing?
Well, since the beginning, we were the first ones to use cryptocurrency to trade against African currencies. We're the largest company on the planet, I believe, that facilitates remittance payments using a mixture between fiat, crypto, stablecoins, and we've been doing that since the beginning. It's not all of our business, but it's a significant portion of our customer segments. So for us, we've just been a leader in this space and really looking again for that profitable, efficient business model that mixes both crypto and fiat. And I think that's the hybrid approach that companies who are looking for sustainability should take. So when FTX came along looking for a partner on the African continent, it was a perfect match. And I think for FTX, they are really looking for a long-term profitability. They're looking for a long-term growth. And so they needed not only a trading platform, but also a company able to run the operations and build out the infrastructure to facilitate that trading. And we often say in frontier markets or emerging markets, if you want to do something, you have to build the road to get there first. So I think it was a great partnership in that they got the infrastructure, they got the settlement platform, and they also got a live trading business at the same time.
And you're not just growing organically, you acquired, I think, Exchange for Free recently as well. More acquisitions to come, maybe?
Yeah, so Exchange for Free was our second acquisition. We acquired Transfer Zero in 2017. For us, we're very picky about acquisitions. We're always looking. We meet with a lot of companies, but historically it's always been either our customers or our infrastructure partners that we then end up acquiring. When we enter a new market, we look immediately to who we can partner with, but then very quickly we either build ourselves or we buy to go fully into a market. And part of our special service and our special sauce, I guess, is the ability to analyze the best way in each of these markets. And when you're working on another continent like Europe or North America, each market might not be as unique, but on the African continent, there's truly so many unique differences, even within sub-regions, that it's really important to have an analytical approach to the best way forward to build out that infrastructure that's going to give you uniform service. So for us, when we go into every market, we're really looking, what is the regulation right now? What is the regulation going to be in 5 years? What are the licenses available now? What are the adjacent licenses we can get? So it's a bit of a complex entry model. And so for us, when we find an acquisition target that has one or more licenses, that has the infrastructure for just that market and is able to provide a low error rate or a really great redundancy operating model, we go for it. And we don't always look for them to also be a trading platform. That's very unique. So I think Exchange for Free was one of the only companies we saw which not only had unique infrastructure and licensing, but they also had a profitable revenue model and a live customer portfolio. For Transfer Zero, it was more of an acquisition to enter the market with a great license and infrastructure. And either if we see, I'd say it's more common to find the infrastructure company. It's very rare on the continent to find both.
Okay, so we've heard a bit about Aza Finance. Let's now get to know Elizabeth a little bit better. So how did you come to found an Africa-focused fintech, I guess is the kind of first and most obvious question to ask.
Well, like many founders in the fintech space, I started out in what we now call TradFi, traditional finance. I was working on the trading floor in Credit Suisse, and I was in investment banking in Goldman Sachs in Frankfurt and New York and Zurich at a time when the markets were collapsing. So I saw the highs and then I saw the lowest of the lows, and I think there was a lot of lessons to be learned. And after I paid off my student loans, I joined Mohammed Yunus's company, Planet Finance, which is a social enterprise, alongside Jacques Elliott out of Paris. And they were really doing a lot of microfinance, cross-portfolio services. So they were investing, they were building, they were rating, and they were consulting with microfinance institutions. So I had planned to go to Southeast Asia, and they sent me to Nairobi, Kenya. And I thought I'd be there a year, and I ended up staying 10. And I think what was really exciting was the way that I saw immediately in these small institutions a mirror of the very large institutions I had just left. And although Credit Suisse had 66,000 employees at the time, I saw some of the very same issues the management was facing on these smaller micro institutions. And one thing I kept writing about in the reports while I was in the field for 5 years was the truly bizarre way that there was no local currency products. Although there are 55 currencies on the African continent, most of these small institutions were carrying dollar or euro risk through their lending, and a lot of development banks or do-gooder lenders were burdening these institutions with heavy foreign exchange losses. And so when I started trading, it was really out of a personal and professional passion to solve this issue. And when we started to trade, I thought maybe I would be trading directly with small businesses, giving them access to local currency liquidity so they were able to trade in and out of the Kenyan shilling directly against other currencies. And what we saw was that it went up to the largest businesses around the world, Procter & Gamble, KLM, even some of the largest remittance companies, Western Union, MoneyGram, were not able to access fair rates. So it was quite exciting to kind of hit the nerve of what that looked like. And while we did start with cryptocurrency, very quickly we realized if you're a market maker on both sides of the currency pair, you don't always need to use crypto. But crypto comes in amazing use when you're trading on the weekend, when you're trading at midnight, when you're trading with counterparties around the world in different time zones. I was on a stage the other day where another fintech founder tried to say that only criminals trade at night, and I said, well, you clearly don't trade with Asia. And I think it's a real painful thing to constantly see so much prejudice against African customers, banks, institutions, companies, and the de-risking that goes along with that. And so I think what we love to show at Aza Finance is that our customers are completely compliant, and we follow UK and European law and compliance, AML checks, everything that every other fintech does around the world with these customers. It's completely capable. And when we use cryptocurrency, it's more for convenience, it's more for ease of trade, it's more for cost of settlement, and it has absolutely nothing to do with regulatory arbitrage or anything that people throw at us. And I think when FTX was looking for a partner, they were quite excited to see how compliant our program was and the infrastructure we built around that.
And on a personal level, I mean, how hard was it for you personally? Well-paid job in finance and TradFi, as you were saying. How easy was it to go it alone, and how easy a sell was it to investors and potential customers?
I think I've always chosen the road less traveled. I left home at 18 from New York and worked abroad since. So for me, I was always a nomad. I think it was hard to take that step to become an entrepreneur. I really was fed up with the workplace environment that I kept working in, even in a social enterprise, and even working with a lot of the big social lenders and development banks. And I think my co-founder Charlene Chen and I would meet regularly and complain about, honestly, the men that we worked with and a lot of the partners that we worked with who we didn't feel were giving us credit for the work we were doing. And we just felt like the worker bees doing all the research and never getting to make a decision. And so we saw a lot of our male friends around us starting companies in Kenya around 2009, 2010, and we just decided to do it ourselves. And we really had nothing left to lose, because I think our careers were stalling in that we were not getting promoted, we were not getting hired for these consulting jobs. And so once we started, everybody in the community kind of looked down at us a little bit like, oh, these two girls are going to give it a try. And now most of their companies have gone bust. And here we are 10 years later. So I think, we hit a low point in saying, well, we have nothing left to lose. Let's give it a go. And I applaud entrepreneurs that start out at the beginning of their career to do that. But for us, it took us about 10 years working to get that kick to start. But we've been energized ever since. And every time we hear a no, we think back to those first no's. And we say to each other often, and now Charlene sits on our board, she's no longer in management. We remind ourselves of those early days, and we really just say the road to victory is just getting out of bed in the morning and just always finding a way forward.
Great. Wow, what a story. Okay, so look, a key part of this interview is to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with Aza Finance CEO and founder Elizabeth Rossiello. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Elizabeth, let's talk about the future of finance. So, I guess in Africa, as far as fintechs go, M-Pesa is the kind of the original, if you like. Africa pioneered mobile payments. Is it still in the vanguard of fintech and payments?
For a long time, every conference we went to about innovation in Africa featured mobile money. But what a lot of people don't realize is that it's a closed loop system owned by a single company. So if that company doesn't want to partner with you, or that company doesn't want to update you, or MTN or Orange have some sort of management dispute up north, then you're really not going to see innovation for that cycle. And what I think the future of finance is, and what I think the constant iteration after mobile money has shown, is that it has to be open source. It has to be open platform. And I know the words open banking are a bit of a loaded term in Europe, but I think when we think about DeFi, and that's a term thrown around a lot, but really when we think even just back to open source, letting in new entrants, letting in new innovators. And even myself, when I was at the cutting edge of bringing crypto to emerging markets in foreign exchange, I have to not have the hubris to think that I was the last innovator and that there's always somebody right behind me. And I think if we keep that in mind, we start to understand the pace of innovation. And so when we start to think about technologies and the way business models are going, we can't just stay with what has been working. And I think a lot of banks everywhere in the world, but definitely on the African continent, keep saying, oh, this innovation wave will die out and then we're going to go back to the old revenue model. I mean, that's almost never proven to be true since the history of time. So I think the mobile money revenue model, where they build heavy infrastructure to have access to the internet and then, sell mobile minutes or time to compensate for that, is a losing game. And I think they know that as well. And so we really have to think about what this web-based approach looks like and who's going to pay for that infrastructure. And it's going to be constantly evolving. And we have to also remember that the youth vote is so important. And we now have people who are grown up holding a phone, and the way that they save and the way that they take risk is wildly different than their parents. And it doesn't matter if they're low income, middle income, high income. The idea about risk profile and what they're willing to do with their money and what kind of investments they're looking to have is very different than even my generation.
Right, and I suppose one thing that many people may be about to experience, which hasn't happened for a while, is the potential of a recession, talk of a global recession perhaps happening. Are the region's fintechs and financial institutions going to be held back as a result, or are they going to kind of see this, let's not call it a crisis yet, but let's see this situation as an opportunity to kind of, innovate more and invest more so that, when the dust settles, things have progressed that much more?
Well, I just heard Eric Schmidt speak 2 weeks ago, and he said even in a global recession, there's still demand. So I think that really sticks with me. And if we learn from COVID, which is barely out of our traumatic part of our brain, I think we knew that even when things slowed to an unimaginable halt, there was a desire to participate, to invest, to get online, maybe in different amounts, but that's a great place to experiment and to play. And I think we're going to see a wild amount of innovation. I just tried to get a transatlantic mortgage and just realized that British-French mortgages don't exist anymore and are being shut down. And, that's going to get even worse for a lot of people with recession. And I think all of these areas, all of these inefficiencies that have been protected by whether it's the boys club or the bank club or, incumbents, I think that's all coming tumbling down, whether it's from working from home or from COVID or from distributed companies or from a global recession. It's just breaking those barriers down, and it lets the doors wide open to new innovators. And I'm not saying we're going to see, unicorn after unicorn, but we are going to see those innovative models get time and space to enter the market and to experiment. And I think we're going to end up with a lot of new innovative companies.
I was in Rwanda just recently, earlier this year, hosting a banking conference. And many of the speakers were saying that regulators and finding the right talent are perhaps two of their biggest challenges. Sometimes it can take like a year, if they're lucky, to get approval for certain things. What's your take on these challenges on the continent there?
I mean, it's no better at the CFTC in the United States. So, what I've been telling everybody who, mouth drops when I say I moved to Kenya is look in your own backyard. I've had several applications with the FCA the last few years. I mean, that's not exactly lightning quick. So it's just part of, the third level of society. So, government sometimes takes time, and some people think that's a good idea and some don't. My first job ever was at the German Bundestag as a translator for the Economic Research Department. And, I thought that was fast-paced until I went into the private sector. So I think, it takes time, and that's good and that's bad. I think it weeds out the companies that don't have the legs to keep it up, and you need to find the revenue to support yourself while your license comes in. And you need to make sure you understand each local legislative environment to be able to go in there. Is it always fair? Absolutely not. But what is on this planet? So I think it keeps everybody real about understanding what it takes to be a successful business.
And Elizabeth, one of the other feathers in your cap is that you co-chair, I think, the World Economic Forum's Council on Blockchain. There's been a bloodbath on crypto markets with digital assets this year. What's your best guess as to what happens from here on in? Is a long crypto winter in store?
I've been through several crypto winters and summers, so I tell everybody it's exactly like any other kind of finance. There are cycles, and what goes up must come down, and if it doesn't, something's wrong. So, we like a spring cleaning, and I think a lot of people were concerned about Luna before it happened, and I think it's just a reminder that there are no special rules for crypto finance. It's similar to regular finance, which is, do your research, understand your risk, and invest what you can. Of course, the retail investors get hit the hardest in any financial market, whether it's the New York Stock Exchange or the FTSE or a crypto market. So I think that's always hard because we try so hard to bring in new retail users to this world. But at the same time, I see the future of this technology really in gaming, in society, in, retail, in art, and a lot of other places. So I think the early days of penny stock trading or similar are not where this industry is going. So if there are some wild flows up and down, and by the way, it's still less volatile than a lot of the African currencies I trade or the euro right now. So I'm not afraid of volatility. My blood pressure doesn't move for that, and I think it's healthy.
Okay. So look, Elizabeth, it's time now for our round of rapid fire questions. Are you ready?
Sure.
Okay, so got 90 seconds. Just going to ask you for one-word answers if you can, and we'll try and get through as many of them as possible. So here we go. I'm going to start my timer. What fintech segment has the biggest potential over the next 5 years in your view?
Mortgages.
What is the biggest pain point in your everyday financial life you'd like to see resolved? Mortgages?
International card acceptance.
Are we at the beginning, middle, or end of the fintech wave?
Beginning.
Do you have a metaverse strategy?
Get into it.
Do you think that EU and US regulations are keeping pace with new developments in the financial industry?
Never.
How would you describe NFTs? A scam, B, an interesting concept, or C, a part of the future that we really don't want to miss out on?
C, 100%.
Have you ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Absolutely. No way.
On a scale of 1 to 10, 1 the lowest, 10 the highest, how probable are the following over the next 10 years? That one of the neobanks will be as profitable as a top-tier legacy bank?
10.
CBDCs will become a mainstream reality in the EU and US?
7.
SWIFT will still be the main tool used for transferring money around the world?
0.
That a new rival, card or non-card base, will emerge to challenge Visa, Mastercard, Amex, etc.?
I think cards are dead. 1.
That we will see a top-tier bank or insurer bought by a fintech?
10.
Okay, wow. Elizabeth, you are the first person to answer so succinctly that we got through all the rapid-fire questions. So,
well,
so congratulations.
I'm born in New York and I worked in Nigeria. Nothing's faster.
No nonsense. Okay, great. Well, look, I'm afraid we're out of time for the rapid fire and we're out of time for our conversation, but I really do appreciate your taking the time. So thank you, Aza Finance founder and CEO Elizabeth Rossiello, for speaking with me today.
Thanks so much.
And for those watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. Hope to see you next time. Bye-bye.